traders, what up investors? Ken here from Dyslexic Investor, and thank you for tuning in for another fantastic video. Yes, if you saw the title, we're going to be talking about Tesla. So if you're not a fan of Tesla, just keep on moving along. This is going to be really talking about the bullish case for Tesla. We have this gentleman here, Mr. Adam. He's an analyst for Morgan Stanley, and he's giving a very compelling story, which I don't think a lot of analysts, and again, he's an analyst for global car companies. So he covers Ford, GM, Volkswagen, and so forth. But he's giving an understanding of why people are potentially not pricing in some certain components in Tesla. So let's go ahead, sit back. We're going to be looking at the couple of clips from the video, looking at some data, some news articles that's been coming about Tesla, raising some prices on the Model 3 and the Model Y, about $500 just late yesterday. And then, of course, looking at the Loop. We saw the Las Vegas Loop. That looks fantastic. And then really looking at the chart, and then we'll just have some fun from there. All right, let's sit back, enjoy the show, and I'll catch you here in a second. All right, here we're back. We're going to be looking at this fantastic part from the analyst here talking about you should be owning Tesla if you have any rhyme or reasons to be investing within the EV market here in the United States or globally. So let's watch.
Oh, look, Tesla, we just think it's a must own here. And I say that because we frequently speak with investors that say, Adam, I want to put together a long-term EV or AV exposed portfolio, but I'll never own Tesla. And we kind of take a deep breath and say, well, then you run the risk of not owning the company that could make all the other stuff you do own obsolete. And so while we do have better ideas in our recommendations for EV and AV exposure than Tesla, one of our most important messages to an investor is that you still have to own Tesla as a bit of insurance due to their leadership and ability to attract and importantly to deploy capital. And I think the next year or two, you're going to see them really dial that up as they become an infrastructure company drafting on all these projects and infrastructure bills all over the world.
Adam, just to be clear, good morning, it's Guy. You're not saying that you shouldn't own other EV companies. You're just saying that Tesla needs to be part of the mix in terms of the portfolio that you're putting together.
Yes, that, but also that due to the fact that Tesla has zero internal combustion entanglement and is in.
So this is a very important part. So if you're not listening, put your headphones back on and look at the screen. This is a very key point, which I think people kind of undervalue right now.
A position during an arms race type of, forces to attract capital and talent, perhaps more efficiently, more advantageously, without having to defend any of the melting ice. That is something we think is underestimated. So sure, there's lots of legacy companies. They're all, if you listen to what they're saying, they all sound like they're Tesla. And in many ways, they're frankly obsessed with Tesla. They would, if you listen to 30 seconds of a Volkswagen or GM, or you'd think they didn't sell any internal combustion cars. And it turns out they sell 98% of the revenue for ICE.
So key takeaway, this individual is Adam Jones. He's a Morgan Stanley advisor, and he is, wouldn't say extremely super bullish, but he's just isolating like, hey, if you want to own EVs, if you wanted to have any of your fingers in the cookie jar of EVs, you need to be having a certain portfolio position or a just exposure to Tesla. For insurance purposes, it is literally the market leader, and it's just a fantastic candidate to really revolutionize this EV movement. Again, highlighting that GM, Volkswagen, and Ford, most of their revenue is still coming from ICE, which is internal combustion engines. That is basically something that could be a lagger, and their EV movement could be taking a little bit longer, and then at the same time attracting new engineers, strategists, all the kind of people that go around building EV models is going to be highlighted on Tesla being potentially getting, again, the market leader, most likely gets the most shine, gets the best hires and so forth. So we'll see on how that complies and how that continues going forth. I think most people already know that I love my Tesla and I'm a long Tesla bull here. want to highlight one more clip, and let's go jump to that.
Valuation model.
So now they're going to be talking about the valuation of, like, you hear this on both sides of, like, oh, the valuation's like 150x on PE ratio, on this kind of revenue to sales, on product cost, all this kind of things. But this is the way I think, how I internalize and how I view the growth of Tesla. So again, as analyst, I have to give him a high five. Boop.
That is applied to this company.
So I think a good heuristic, if you think about the value of Tesla, is to think about Apple, okay? One of the worst kept secrets in tech is that Apple's developing a car. How would a company like Apple, or fill in the blank, other mega tech companies, how would they approach transportation? How would they approach autonomy, electrification, networking, software, AI? It's more than just unit times price, okay? If you solve for just units for Tesla, of course, you get these really ridiculous things like Tesla needs 70% market share. And of course, then that reinforces people saying, I'll never own Tesla. But we think Tesla is an installed base play, growing 1 million cars on the road to then 30, 40 million cars by the end of the decade.
And remember, Tesla is trying to get in 2021 1 million cars delivered, not just produced, but delivered. So delivered is when the customer has the paperwork, he or she has the car fully under their name, and they're able to drive it. That's basically what checks off as Tesla as a delivered vehicle. You saw, of course, the Q1 that they made, or they delivered 185,000. So they're basically almost 19% to that 1 million this year. Of course, with the ramp up from the Tesla factory in Texas, and then the Berlin factory in Germany is supposed to be going live sometime in the summer. Still a little bit unclear when that's supposed to go live. And then as well, we still have quite a few cars pumping out of the factory in China. But that's a whole nother video. We can talk about that China factory as well.
And getting an average revenue per unit, or an ARPU, from their monthly active users, and getting software-like and software-derived revenues from that installed base. When you start doing that, frankly, you have Tesla not covered by old-fashioned auto analysts like me. I genuinely believe this, Guy, if we at Morgan Stanley do our job properly over some number of years, it will be covered by our tech or software team, because it'll make sense. That'll be the model, and they can comp it versus those types of stocks instead of looking at a legacy auto company and saying Tesla looks expensive and then dropping the mic.
So
perfect. So just, yeah, people are still stuck in this really finite place on putting Tesla as an automotive company or a software SaaS technology company, and that is really being skewed left and right on multiple fronts. And that battle is what the stock has been seeing over years. Of course, we've seen the bulls win much more recently, but if you just look back 3+ years, it was a battle. Like Tesla was heavily shorted by a lot of folks, a lot of negative press, just completely getting pooped on and getting smacked around. But I think the story is finally trying to break through on, hey, this is not your mom and pop automotive company as we know it. So let's go ahead and look at some breaking news via Tesla, and then we'll be looking at the chart, folks. All right. Okay, let's look at some news here. Of course, this is, again, we're looking at the Gigafactory here in Berlin, or slightly outside of Berlin. Of course, that's in Germany, if you're not sure on what Berlin is. Of course, they are excited to get this factory up and running. Of course, this is going to be the first factory in the continent of Europe. So that's going to be really kind of transporting that stuff there. We all know that Tesla has a pretty large growth potential in Europe with, again, Volkswagen kind of has that market somewhat on lockdown, being a very large market within the German market, honestly, and then really across Europe. But at the same time, with Tesla going in there, we already have a lot of the Finn countries, the northern Nordic countries, the Denmark countries, the more very progressive like EVs, and they're open to new technologies, have been very robust in allowing very aggressive tax credits and like incentives to buy Tesla. So I think this is only going to continue to grow. We're seeing that here already in the United States. Of course, you can see here that they're hiring. You can go ahead and apply in all the different departments there. And when is this supposed to start opening up? So it's not supposed to open up until quite some time. Says the first cars are expected to roll off the production line at the summer of 2021, starting with around 3,000 employees. Tesla still plans the factory in July despite delays, industry sources told Newswire in mid-March. So basically, as you remember, like Tesla is fantastic on creating factories. You saw the China factory in Shanghai go up within 8 months. Of course, in Germany, there's a little bit more red tape, and it took a little bit more time to kind of get through that process. And at the same time, the whole plant doesn't have to be open completely right now. Tesla's very efficient. They can open up very key sectors and just start rolling cars out to kind of produce some overhead and get some cash flowing at that area. A couple updates on the Model 3. The Model 3 and the Model Y are both getting a $500 increase on their prices, and they're introducing the new trims within the Model 3 that you saw in Shanghai, kind of matching that white and that black interior with the brown casting there, or brown wood paneling there. So that's another component. Again, they have raised the prices quite a bit, again, due to every car maker. You hear everyone talking about it, chip shortage, blah 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 blah. That's just an ongoing running issue for, of course, 2021 until that supply issues come down. And at the same time, we're having Tesla climbs 1,300% in Japan as Gigafactory Shanghai allows more efficient deliveries. So that's expanding into a market where many people are talking about. Like, yes, a 1,300 increase is something not too much, because again, you can see here that they sold 44 in March of 2020 versus 588 in 2021. So that's very not much to the bottom line. So that you really have to kind of get past the headline of like, oh, 1,300%, how much did they sell? Okay, they started with 44 in 2020 and now there's 588. So don't run and just buy on just this news. So this is something to be very well aware of. Make sure you read the articles before you're just reading at the headlines. So that being said, let's go ahead and jump to the chart, look at some support resistance lines, potential price targets for the year of 2021, and let's have some fun over there. Let's go ahead and just run over there now. Okay, so looking here at Tesla, you kind of see here, starting out on the weekly chart, I just wanted to highlight this very impressive move that we've seen here really kind of just take off here again. Like we just talked about the last 18 months to 2 years, we've finally seen it really just kind of take off. Because again, if you go out to a further time frame, this stock has really, again, what we talked about, the bears were on top of it, the short sellers, so many different things, where it was doing next to nothing for literally almost a decade actually, well over 7-8 years, where it was doing next to nothing, just kind of bouncing around, getting a little bit of good news and then coming right back down. But it's not until recently where we've seen the move basically just really break out and go completely parabolic here on the monthly chart. So if you start going down to a smaller fine grain, the daily chart here, you are seeing here that $900 range. We've had multiple levels of trying to get past that for some time, kind of failed there. Of course, we saw the somewhat of a pullback within the NASDAQ, and a lot of the tech heavy stocks kind of come down here again. We were looking for some initial short-term support coming in around 600, 606 to be precise as of right now, because we can see here on the green dashed line here, which is the 144 EMA there. So that's going to be your first level of support here. And a metric a lot of the growth investors kind of go on and traders is the 50 SMA, and we're still below that. So that's kind of was leveling off and now kind of curling down here a little bit. So if we can get past like 725 to 730, we can potentially see a nice little breakout there at those levels. Of course, it's still in chop mode. In the short term, we're seeing some resistance trying to break above 710, 712 range. We're going to kind of seeing it maybe multiple short-term tops there. At the same time, we're seeing volume very light here. So if we flip over to this chart here, we can kind of really highlight on the average volume here. Once I slide this up, You can see here just recently we're seeing very below average volume. So that's an indicator of just like it's not saying it's not getting a lot of love. It's just like it's just not a highlight thing right now, and it's kind of consolidating, building a base. I can kind of consider it's a little bit more choppy than I would like for a base, but it's just kind of consolidating. You can kind of see here again that around that 700 to like 650, 630 range has just been kind of slightly building a range there and kind of being range bound. So the volume here, what we're looking at here is the average volume on a 20-day basis is around 34 million. And we've been substantially below that. Again, the last couple of days we've been below 25, 26 million shares. So that doesn't mean it's going to come crashing down. That's not the only indication of that. But it just means lighter volume. Again, less likely for people getting in and out of it. It hasn't been really much in the news on a lot of exciting stuff. Of course, it's had a pretty substantial pullback from the all-time high to this level down here, which we're looking at basically, what was that? 900, what is that? 900 to the lowers 550s, which is nearly a 40% decline. So that's pretty substantial for an EV company. Of course, is it due to because of the 10-year note, the 10-year yield? Sure, you can tie it to that. That's whatever the news, and so whatever goes to it. But Tesla was just doing just fine when the 10-year note was at 2% before the pandemic. So, and it's at 1.65 right now. So it's not really too concerning until the 10-year note gets like above 2.5 to 3. That's when things could be coming interesting for a lot of the growth stuff, because we haven't seen those kind of rates for some time. So key levels here, again, looking at Tesla, some key takeaways before I let you guys go. Again, $900 is that level that we want to see potentially be breached. Of course, that's the all-time high. Short-term levels of resistance to the upside is that around 710 to 711. And then some short-term support to the downside is around 607 to 600. And then some stronger support coming in around that 550 to 545 range there. And then I have a key price target, basically potentially around 1150 for the end of the year, but that's going to be really heavily supplied on the car deliveries and really important on the Gigafactory within Berlin to be coming online, because again, there could be some hiccups going forth there. But yeah, I think it's a fantastic move. We did also see the Tesla Loop, which was the Las Vegas ride-sharing stuff through the convention center. So that was also a pretty fantastic story to see, and just continuously seeing the iterations of just not the Tesla, but using their software, which again, it's a software company, I believe, on using their automation and their autonomous driving to the full capacity and being able to make some fantastic deals around that. So on that note, ladies and gentlemen, thank you from the bottom of my heart. Hopefully you have a wonderful day, and I'll catch you guys on the flip side. Peace.